Stock of the day though, thought we'd take a look at the Dexus Convenience Retail REIT, reporting a near 6% fall in first half revenue with a net loss of $1.7 million versus over $3 million profit previously in the previous corresponding period. Looking ahead, the company has updated its guidance and distribution to between 20.8 and 21.1 cents per share for FY24. And be sure to join us a little later today. We'll speak live with Jason Wheat, the Dexus Convenience REIT Fund Manager, on the back of those results. So that's at 3:15 Eastern Daylight Time right here on Ausbiz. But let's see what the gurus think of it. David Lane, what did you think of the update from Dexus Convenience Retail?
Yeah, it was a good update, and I think it just confirms what we think about the business, in that it's a well-managed business. They are able to manage their facilities very well, and also their balance sheet well. So they've actually got about 81% of their debt hedged, and they've got an average expiry or average maturity of about 3.3 years. So that means that it's somewhat sheltered from interest rate movements, and that's obviously been one of the big concerns that a lot of the market have had with REITs over the last couple of years, is the fact that we've got higher interest rates, therefore leading to adjustments of value. We have seen that Dexus Convenience has picked up quite a bit over the last few months. They were trading at a fairly significant discount in November, but they've improved quite a bit now. But we still think that there's value in the business. We've got an accumulate on it, and I don't see that today's announcement will change our view, particularly or any. So I think that if you're looking for a fairly good REIT that has a good yield of about 7.5-8%, I think that it's a good one to put into the portfolio.
All right. Kai, what do you think of the update today?
Yeah, I think a decent result from Dexus. But for us, we're still concerned with the thematics of office leases, with the whole change from in the office to work from home.
Yep.
I think that trend is still entrenched in the workforce. So
that doesn't affect Dexus Convenience Retail REIT, does it? Or
no.
No, with the portfolio and things like that. So what you're saying is you've really got to differentiate what the REITs are in at the moment. Yeah,
that's right. And in terms of office spaces, it's that trend is likely to continue. So we're still not too. We prefer probably Goodman Group. I think Goodman would be the preferred pick for us.
Okay, but sort of the Dexus Convenience Retail REIT, big discount. Has it been dragged down just through poor sentiment for all of the REIT market? Because we had National Storage, and was it Abacus is another storage REIT on over the last couple of weeks. They're trading on massive discounts as well. Got nothing to do with commercial or retail property at all, and storage units have been going up in value, but they're on a massive discount, just dragged down as a result.
Absolutely. I think it's all, again, tying back to the interest rate cycle.
Right.
And
so just general sentiment with REITs.
Yes, I think so. Like, that's had a big drag on the market.
Yeah.
I think the interest rates will probably still remain higher for longer. And last week we saw unemployment figures in the US come out, and it's a substantial beat with 350,000.
Yeah.
So, I think that rate cut in March is probably off the tables.
In the US.
That's right.
Yeah.
That's right.
And here in Australia?
In Australia, it's a bit more mixed because the inflation figures have come out pretty soft. Yeah. So I actually think, probably in the latter half of the year, we're going to see about 2 rate cuts coming from the RBA.
Okay. Yeah. All right. Okay. That'll be welcomed by a lot of people.